will start. So just in 1 minute we'll begin. Swaps. Last. What do we do the last? So we could open the last pages. Or it will be the page number 292. You all can open page number 292. Swaps. From there. So very good evening everyone. So this is Koushik Mukhesh. Today we are going to have a holistic explanation on the topic called as interest rate swaps. So many people are asking for so long time about this particular chapter, interest rate swaps. So we are going to start with interest rate swaps as a chapter today. So this will be applicable for November 23 SFM exams. Even if you wanted to revisit this lecture for the AFM, same concepts are applicable. So we are going to start with the area called as interest rate swaps. So I will share you the document as well once this video recording is completed, but before that I will show and display on the screen. So here it starts. I will put it conveniently for the visibility of the students so that you can directly see on the screen. I will explain every point inside the swaps from the exam's point of view. So completely exam point of view I will explain this particular concept. Okay. First, without any delay I will be jumping into the concept. Let us first have a clarity as to what is this interest rate swap? Why swaps are required? First, if you understand the basics of a swap transaction, then you can easily understand why these concepts have come. Okay? See the screen once. Rather than explaining with some superficial examples, I will explain with the example on hand itself. See the screen. A 3-year swap. And first 3 questions what I am going to deal now are old ISM questions. New ISM with the directly started with the exam questions. But I don't want you to do that. First, to understand the interest rate swaps, first let us have a clarity on the problems given in the ISM. As an illustration in the ISM it has been given. First let me consider those. And before even we continue, viewers please give me a feedback. Is the voice clear? No.
Now can I know how the voice is coming? Yes. I think some network issue has come. I will restream it. Yes, I will repeat. No problem. So I think some network issue has come. Okay. So first one, what I said is, so the chapter we are going to start is interest rate swaps. Interest rate swaps is a independent chapter in the syllabus wherein we need to understand interest rates with regard to the hedging, speculation and arbitration. What I said is, in this particular lecture, we will be covering out 7 to 8 different models of swap transactions. There are totally 10 types of questions. 8 I will cover. 2 a small video I will release. In that you can revisit to those 2 which will be on the swap valuations. So first in this lecture we are going to cover 7 to 8 different types of swap transactions. To understand the swaps, question number 1 will be helpful for us. In this question 1, we can understand the basics of the swaps. This question was actually taken from the old ISM. Okay, old ISM law, what they have done is, they kept one question for the students to understand. I divided that question into 3 parts. Question number 1, 2, 3 are from the ISM only. So we will divide that into 3 different parts. After that, we will be understanding how the swap transactions works with question number 1, transformation of liabilities in question number 2, transformation of assets in the question number 3. After that, technically how the swaps will work, the mechanics of the swap, the behavior, everything we will see in the next problems to come. All these we will complete in the today's session regarding concept of basics of swap, hedging using the swaps, and as well as the arbitrages in swaps. These are the 3 areas from which one question will come in exam. Another area which is expected from the swaps is swaps valuation. This will be another separate lecture. First we will cover 70% of the swaps as a concept. Once completed, swap valuation will be a separate discussion again. Okay, hardly 1.5 hours. But this is the most important. Basics of swaps if you understand, half the concept, that means if the today's session is understood properly, half the concept of swaps in our syllabus will be understood. Not even half, 70% you can understand. After that, we need to practice some amount of problems, that's all, enough. Okay. With the today's discussion, what we make, absolutely from the exam point of view, you can answer any question that comes in exam. That's my guarantee. Clear? I put 6 types of exam questions also in this. I will show you which attempt it came. So with that, we will first start with the discussion. Okay. So viewers, please give me a feedback. Is the voice clear? Is my voice clear? Okay. So let's focus on this. Sir, concepts seems to be very complicated at the beginning, but once we dive into the concept of the swaps, you will find that comfort level. So let us start with the concept. See the screen. And before I start, all the viewers, please be live till the completion, because once we begin, you can't understand if you have any kind of break in the middle. Let's start with this. 7 different kinds of concepts to 8 concepts at least I will cover now. Okay. Please open your module number 2 if you have page number 292. Interest rate swaps. Module 2, page number 292. For the convenience of other viewers, I will be putting it on the screen and I will be sharing the document. First, let us cover from this. So please, YouTube live is also going on. So therefore, so this chapter I want to put it for everyone. So please, everyone open section number 2, sorry, page number 292. Question number 1. Let's see. A 3-year swap is initiated on March 5th, 2010 between Microsoft and Intel. Microsoft agrees to pay a fixed rate of interest at the rate of 5% per annum on a notional principal of $100 million, and in return, Intel agrees to pay Microsoft floating rate of 6-month LIBOR on the same notional principal. Agreement specifies the payment to be exchanged every 6 months. The floating rate of interest on various reset dates happens to be as follows. These are the rates given on respective dates. Calculate net cash flow to the Microsoft and Intel from the swap arrangement. Comment upon Microsoft and Intel position regarding shorting and long position in the bonds. First, read the question, then we will start with the discussion. I promise you, once you understand question 1, 2, 3, technically 1, 2, if you understand properly, any kind of interest rate swap question regarding basics, transformation of assets to liability, liabilities to assets, and all other things except swap valuation you can do properly if you listen to first 3 questions, at least 2. Okay. So please take time, read question number 1 first. Read the question. Okay. See here. First thing, everyone has to first understand what is this concept of swaps. Swapping is a concept of giving one and taking another is called as a swap. Swap means exchanging. Like how I can exchange goods, I can also exchange interest rates. Why exchange is required is a question number 1. So why anyone has to exchange interest rates? and how it will be exchanged. Agreements are there. Through that agreements you can exchange your interest rates. But everyone has to understand, whoever listening, we are not exchanging actual interest rates. Actual interest rates. We are exchanging only we are not exchanging actual interest rates. We are only exchanging notional interest rates. You will get a doubt as to what is this actual interest and what is this notional interest. I will give you example. What is a fixed rate and what is a floating rate? Fixed rate means irrespective of the market fluctuation, I should pay the same rate of interest. Correct? If I invest, I will get same interest irrespective of market rate. If I have to pay the same interest irrespective of the rate of change. Simply, market it is 8% when I take the loan. It is 8% when I take the loan. It became 8.5. Even then I will pay 8. Fixed rate I am talking about. Even if it comes to 7, 7.3, 7.4, still I am forced to pay how much? 8%. Many companies feels this as a disadvantage. Why? When the market the rate is prevailing at 7.3, 7.4, why should I pay 8? Yeah? And second thing, when the market rate prevailing in the market is 6%, 7%, 7.5, why should I pay 8? Are you understanding or not? In this case, what are the options available for a particular company? I will tell you two options which are happening. Happening means which are really prevailing in the world today. Whenever company borrow, repeat, whenever company borrow the money, it has to pay the interest or not. When it has to pay the interest, it can borrow in two ways, fixed rate, floating rate. If I take fixed rate, there is an advantage. Hike in prices will not be affected, but the fall in interest rates will be affected. Why? Even though the rates are falling, I should pay the fixed rate. Listening, at that time, most of the companies will feel, if I had a floating rate, maybe I may be at advantage, correct? Or second, I invested. What I done? Invested. Company invested in the bonds of another company, or it invested in the loan. Somewhere it has given its money. Listening, it invested in the bonds of another company. They are giving me a fixed rate of 8%. Market rate went to 8.5. How I will feel? Market everyone is taking 8.5, but I am getting only how much? 8. Then companies will be wanting of that particular 8.5. Therefore, listen, there is advantage of fixed, there is a disadvantage also with the fixed. Advantage is when the payments are derived, increase will not affect you, but decrease will definitely. When you are in a payment side, increase will not affect you, but decrease in rate of interest. 8 became 7.5, still you are paying 8. If you are an investor, raise will not affect you, but what will affect you? Fall will affect you. Therefore, so many companies wanted to go for a floating rate. Floating rate also is disadvantage. Can you please tell me what is the disadvantage of having floating? Anyone can participate, please answer. What is the disadvantage of floating? If you know the basics properly, swaps concept has some meaning, or else nonsense. What is the disadvantage of floating? Advantage, okay. Whenever market changes, you will change. But what is the disadvantage? Do you know what is the disadvantage? Change a disadvantage. Uncertainty is the disadvantage. Yeah. What is disadvantage? Tell me. Portfolio management we have done. Portfolio management, what is sigma? Standard deviation. Risk is what? Change in the return risk. Now tell me, there is a company. That company knows that fixed rate of interest of 8% it has taken, 100 crore. Every year how much it should pay? 100 crore loan, 8% fixed rate. What? How much it should pay? 8 crore, 8 crore, 8 crore, 8 crore, 5 years it has to pay. Certain, uncertain? Certain. That means my cash flows are certain, my payment is certain, I have a certainty in the cash flow. If it is floating, floating rates are always traded in India with MIBOR. MIBOR. Everyone, what is it? MIBOR. Mumbai Interbank Offer Rate. International LIBOR. London Interbank Offer Rates. London Interbank Offer Rate. IRRM, the forward rate agreements, I already explained very clearly. For you, I will explain in IRRM very, very clearly about how this LIBOR and MIBORs will be calculated. This is not the time to learn about. Just remember, LIBOR in the international market, MIBOR in the Indian market is a floating rate. Is the MIBOR can be of different types. Daily MIBOR, weekly MIBOR, fortnightly MIBOR, monthly MIBOR, quarterly MIBAR, half yearly MIBAR, annual MIBAR. In India, there are 8 kinds of MIBARs totally. Listening, everyone. Daily MIBAR we call as overnight index swap. What it is called as? Overnight index swap. Today we are going to do one problem also. Recent exams it has been given for 8 marks. Overnight index swap. Name lone clear. Overnight means what? Daily. Daily MIBAR, sir. How it will be, I will show you. Listen again. So I am having a fixed rate loan. Okay. I am having a floating rate loan. Advantage of fixed is, though it is rising, I will pay the same. Disadvantage is, market interest rates are coming down, but still I am paying highest rate. Therefore, floating rate, what is the disadvantage? Uncertainty is the disadvantage. Yes, sir. If the MIBAR goes to 9, I will die. Here at least, whether good or bad, I know something what is happening. There I don't even know what is going to happen. Certain or uncertain? Uncertainty is always bad. Therefore, companies which has taken floating loan, everyone repeat, companies which are taken floating loans they have taken, they have to pay interest or receive interest? Pay interest. Tell me, they have to pay interest. When they have to pay interest, when it is a floating rate interest, when it is it will change every time or not? Slowly rates are rising. I took loan when it is 8, it became 8.2, it became 8.3, it became 8.6, it became 8.9. My interest cash flows are increasing or decreasing? Because of that, my EPS is coming down, my DPS is coming down, my share price is falling. At the end, who is affected party? Equity holder. We should not do like that. Therefore, you can transform your liability. That means you can shift your fixed rate loan to floating or floating rate loan to fixed. Okay na? Sorry, listen now. There is a bank, SBI. I went to the bank, I took a loan of fixed rate. Okay, fixed floating rate la market la interest rates are falling. Now we want conversion from fixed to floating or floating to fixed. Fixed to floating. Everyone, fixed to floating. I went to the bank, okay, and I asked, please shift from fixed rate loan to floating rate loan. Vice versa, let us see. I took floating rate. Rates are increasing, fixed is very low. Now I will ask a bank to shift from floating to fixed. Both cases are not possible. Impossible. Once you enter into bank agreement, you cannot do that. What you cannot do in the real world, do in the swap world. Swap is a parallel universe. Listening or not? Swap is a parallel universe. Literally, it is a finance market. It's a parallel universe. Okay. So how it look like? Swap is a world where what you cannot do there, you do here. How? Take a notional principle and do. Take a notional principle. This can be understood with the example of question number 1. Okay. Let's read the question together. A 3-year swap initiated on March 5th, 2010 between whom and whom? Two companies came together. They said, sir, listen, I will ask you a question. First answer this. Every listener, please listen to this. Share market, you will buy a share. You can buy only when other party sell. You can buy only when other party sells it. Correct? Now listen. You will buy with a bullish motive or bearish motive? Prices will rise in future or fall in future? Rise. Means your vision is what? Bullish. But the person who is selling is having an opposite view on the market. He will be having what trend? Bearish presumption is there. Correct? Answer, yeah. Like that. Whenever you want to exchange your floating rate, there should be another person to take your fixed first. Yes, whenever you want to exchange your fixed to another, you are in fixed now. You want to take floating. To take floating means you should exchange something in return or not, everyone. Interest should be exchanged with interest only. Interest can't be exchanged with chappals. Clear or not? You are taking floating means what you have to do? Give the fixed. Yes. You are taking fixed means what you have to give? Floating. This is the basic knowledge every person should have before starting the swaps. As a revision, lecturer, normal, leave off. So first basic question is, students don't have a clarity on how the swaps are running. So the logic is, interest can be exchanged with interest only. Floating will be exchanged with fixed. Fixed will be exchanged with floating. Sometimes LIBOR floating with MIBOR floating is also possible. Questions are not there. CFA they are getting asked. First let us see CA. After that we can go there. So point is very clear here. Whoever is feeling that, listen to my words, whoever is feeling that LIBOR will go further below, LIBOR will go further below, will take LIBOR by giving their fixed rate. But who will take the fixed rate? Who feel that LIBOR don't fall, it is only a temporary fall, it will again rise in the future, they will take what? Fixed. In real life, swap. Swap is a separate contract, your borrowing lending is another contract. Borrow lending is contract 1, swap is contract 2. Nettila you will be having a floating and fixed effect. How that will happen, we are going to see in problem number 1. Very, very important. This question came for 5 marks in 2016 or 2017 May attempt. Clear everyone in the class? Understood? Read the question for one last time. I will start discussing about the question. So students on live also please give the feedback. Understood up to here? Listeners, please give me a feedback whether you understood or not. Okay, shall we start? Okay. First see this. You explain me the transaction. Swap is 1 year swapper, 2 year swapper, 3 year swapper.
3 years.
See there and tell.
3 years.
3 years swap. That means this agreement of exchange of floating to fixed or fixed to floating will be for how many years?
3 years.
But they are exchanging once or twice in a year.
Twice in a year.
I asked you to read the question. See here what they said.
Twice in a year.
Exchanged twice. 6 months means how many times in a year?
2 times.
First thing. Study material, the problem is they are giving the answers, but they are not writing the logic why the answer came. Okay, that's why I given the full notes here, how these answers came. I am not going to waste your time by reading those now. I will express and tell in the class now. Okay, you can read later. First point number 1. Tell me, everyone please participate. What is the Microsoft agreeing? Microsoft is agreeing to pay fixed or floating? Fixed or floating? Fixed. Intel agrees to pay what?
Floating.
Tell me, what are getting exchanged? Fruits are, vegetables are, currencies are, shares are, interest are? Interest. In real market or swap market? First that clarity should be there. No bank will revise your floating fixed rates. Revision can be made only through parallel world called as what? Swap. Understood the point or not? Okay. Now, tell me, what is the floating rate? So I will, one second. What is the fixed rate of interest? Can you please tell me?
5%.
How much?
5%.
Fixed rate means it will change or will not change? Will not change. Floating means will change or will not change? Therefore, they are changing. They are changing. See the screen once. See the screen. I will give you one question. Answer this. Shall I?
Yes, sir.
Listen. You took a floating rate loan. You took a floating rate loan. Bank ki you went. Day number 1, bank said, I am fixing your, see the screen. I am fixing your rate of interest at how much? 4.2% bank has said. How much percent? 4.2. You tell me, 4.6 months you should pay. 4.2 rate is fixed on 5/3/2010. But you will pay that today after 6 months. That means whenever interest I fix, previous interest will be paid after 6 months.
Yes,
Sir, for example, 5/9/2010. Please tell me, see there and tell. 5/9/2010. What is the floating rate prevailing on that date?
4.8.
Answer?
4.8.
On 5/9/2010, when you went to the payment, they will tell pay 4.8. Today 4.8 will not apply for today's transaction. It will be applicable for the next 6 months transaction. Understood or not?
Yes, sir.
Tell me, whenever I charge interest, I will charge interest for completed period, beginning period, sir. Completed. Sir, for example, you took a loan of 10% from me. How much? I will charge interest today, na, after 1 year. Answer. But rate is fixed today itself. That's the interest rates. Always swaps law concept is the rate they give on this day, you will not pay today, you will pay this date. Understood? Tell me. I will write as a schedule. Don't see the answers. You tell. Everyone can participate. Please answer. Tell me what are all the dates of my payment. Think and answer. Tell me the dates. 5-3. 5-3 I don't make the payment. 5-3 is the first date. Which date?
First day.
In all the remaining dates, interest rates are same or changing. We call those as a reset dates. What dates? Reset. That means floating rate for 6 months 4.2. It reset and went to 4.8. Those dates are called? Reset. Tell me. What date I will start? Tell. 5-9-2010. Next. 5-3-2011. Next. 5-9-2012. Next. Oh, sorry. Yes. 5-9-2011. Next. 5-3. Next. 5-9-2012. Next. 5-3-2013. Up to here, everyone understood clearly, yeah? Okay. Sir, this is 11. Not 12, that is 11. By mistake it was printed. It is not 12, it is 11. Okay. First tell me, rate fixed on which date?
5-3.
Tell me. 5-3. But I will not pay that on 5-3. Sir, today you will take loan and today you will pay interest.
No.
Today if you take the loan, when you will pay interest? After 6 months you will pay if it is semi-annual. Here question is semi-annual basis. Okay na? 4.2, 4.8, 5.3. Here you tell me you are comparing this with this, correct? 5 is for 6 months per annum. 4.2, 4.8 is for 6 months per annum. Per annum. Both are per annum terms. So first we need to convert this and this into how many months terms? How many months terms? Okay. Now tell me. I will draw a diagram to make you understand. How many companies are there? 2 companies. Everyone participate. What are the 2? Microsoft and Intel. Tell me. Microsoft is taking fixed interest. That means it is interested to pay fixed. It is interested to pay floating. Hey, see there. Microsoft agrees to pay fixed, floating. Very good. To whom? Intel. How much? 5%. Okay. And Intel wanted to pay what? Floating. How much is the floating? Changing. Same or changing? Changing. In this, one party will gain, one party will lose. Okay, va? Sir, first everyone tell me, Microsoft original position, it is paying floating or fixed?
Originally it was floating.
Originally is floating. That's the beauty of the question. With whom original transaction is entered? With the bank.
Yes,
Listening, sir, we are doing this question from the banker point of view, swap world. Therefore, deal only from the swap. I am asking question for your understanding. Originally, Microsoft has taken loan in which form?
floating.
Now it wanted?
Fixed.
Intel has originally taken in which form? Answer. Now it want to shift to what you can't do in the real world, do in the swap world.
Yes, sir.
Listening? Okay. Now, tell me. You should tell, I should write. Fixed rate, floating rate, Microsoft and Intel. You tell, I will write. Tell me. What is the fixed rate at which Microsoft will pay Intel?
5.
Tell ya. 5. 5 will be for 1 year. But we should take only how much? 2.5, 2.5, 2.5, 2.5, 2.5 and 2.5. Up to here, everyone understood? Tell me. Please calculate and tell me what are the floating rates. One by one, please tell me.
5-9-2031.
No. 3 years. 6 installments, it was already completed. It's a 3-year swap. Starting from this date, ending with this date. Okay? Sir, okay. Tell me. What is the floating rate? Everyone answer. 5-9-2010. Can I take 4.8 by 2? 5-9-2010. Can I take 4.8 by 2? No. 4.8 I will not pay for this month. I will pay after 6 months. So which rate will prevail? This rate will prevail here. Correct? Tell me the rates. 2.1, 2.4, 2.65, 2.75, 2.8, 2.95. You tell me now. Everyone, tell me. Please answer. Microsoft is paying fixed rate or floating rate? Now, swap world. This is a swap schedule. It is paying fixed or floating? Fixed. And this fellow, Intel is paying fixed or floating? Now, everyone concentrate and tell. Who is paying whom? Microsoft is paying to Intel 2.5. Next. Intel is paying to Microsoft 2.1. Really they will pay together? Swap real transactions don't happen. They will net off the transaction. They will net off. It's like a gamble bet. It's like a gambling, yeah. Tell me, you have to pay me how much? Microsoft, you have to pay me how much? I'm Intel, you are Microsoft. You have to pay me how much? I have to pay you how much? Who win the game? Intel has win the game. Correct or not, everyone? You have to pay me how much? I have to pay you how much? Netla, who win the game? So, for Microsoft, it is a gain or loss? Loss. How much? 0.4. Same will be the gain to the Intel. Correct? Tell me, not yet completed. Tell me. You should, again, think and tell. You should pay me how much? I should pay you how much? How much is the loss for you? 0.1. Gain for me is 0.1. Tell me. Third one. You change it. Situations change now. You should pay me how much?
2.5.
I should pay you how much? You gained a loss? Gain. How much? 0.15. Next. For you, minus 0.15. Correct? Next. Tell me. You should pay me how much? 2.5. I should pay you how much? Tell me. Gain or loss? Gain. How much? Minus 0.25. Like that. Tell me fast. Plus 0.3. Minus 0.3. Next. Plus 0.45. Minus 0.45. Up to here, everyone understood the point clearly. So now tell me, who won the game in the first two cases? Intel. In last other cases? Answer. Microsoft. Now I will ask you a question. Think and answer. This is important observation. Who really have with the bank? Who really have floating? Microsoft. Who really have floating? Microsoft. Correct? Microsoft really having a floating. Correct? Now tell me, floating rate when it is there to the Microsoft, floating rate means what? The rate will change according to the market points. Correct or not? Whenever there is a floating, okay? Whenever there is a floating, I will be going as per the market. But in swap world, I have taken a floating, I have taken a fixed. Intel, originally what is my position? Fixed. Now in the swap market, what I am taking? Floating. How this is going to affect? We are going to do the last schedule. Up to here, everyone understood? See this. This is the answer. See the answer once. We start with 5.3 2010, 5.9 2010, 5.9 because 4.2 we will not pay on 5.3, we will pay on 5.9. From there we will start. So first up to here understood everyone? Understood? Can you go to the next part? Okay. First, I didn't explain anything great now. Just we have seen how one person can enter into contract with another. Now I will ask you one question, answer. 5/9/2010. Who is losing, who is winning? Intel is winning, Microsoft is losing, correct? Okay. How much is the winning rate? 0.40%. Sir, percent should be applied on some amount to pay the amount or not. That's why notional principal will come. How much? This is called as swap transactions used as a tool of speculation. Tool of speculation. So tell me. Sir, now tell me, who is really winning and losing here? You can't tell like that because notional principal in the first time, who is winning? Intel. Second time, who is winning? Intel. From the third case, third, fourth, fifth, sixth, who is winning? That means over a period of 6.5 years, if you see, means over a period of 3 years, Microsoft is getting more. Correct or not? Intel is getting less. That means it's just like a gamble. It's like a gambling bet. Because this is a real interest market or swap market. Swap market really you will borrow and lend only net balances. Same like futures market in India. Which market? Futures also we don't really deliver asset. We don't really give the share. Asal futures market there is no demat account. Futures there is no demat in India. Why? Asal futures you don't buy the share. You will buy, I will sell. Net only will be taken to the margin accounts. Yes. Therefore, same even here. Really you will pay 2.5. Really you will pay me 2.1. If you have to pay me 2.5, if I have to pay you 2.1, net I am winning. Into notional principal you pay me that amount. That's all, game over. Yes. Listening everyone in the class? Understood the point or not? Clarity?
Yes, sir.
That's all. This is the first question that I wanted to tell. Okay, na? So, with this we completed understanding of the first question. Hopefully, I think everyone has got a clarity first. Shall we move on to the next one? Okay. So, read question number 2 in the meanwhile. So, those who joined the live, did you understand? Everyone, those who joined the live, please give a feedback. Did you understand the points clearly? Shall we move on to the next one? Please see the question. See this. Same question 1. Continuation another question. Okay? Question 1 in a different way. This is important. Exam questions are coming like this only as it is. Numbers changing. Concept is same. Microsoft has borrowed money. Now they are giving banking transaction as well. Listen. Till now, first problem we have done as a speculation or hedging. Speculation. That means whether we really went to the bank market or not, we don't know. Yes. But we are using swap market for changing the liabilities, correct? Yes. But here, they clearly given in the question. What they gave? Read. Borrowed money. At what rate? Floating rate. Of what? Libor plus 0.1. Libor will be same or changing? It changes every day. Yes. Every week, keep it away. Every day morning 10:30, it will be announced. Are you understanding or not, everyone? Yes. Clear? Yes, so therefore, there is a concept called as a NDS website. Which one? NDS. Negotiable Delivery System. There, RBIs and other banks are forming an association and they will announce MIBOR every single day in India. Like that LIBOR in London. Listening? So, IRRM chapter I will tell you clearly about how MIBOR and LIBORs will be calculated. This is not the time to learn them. In that chapter, I will tell you MIBOR how it came, LIBOR how it came. 2013 year LIBOR scam happened. Which one? LIBOR scam happened. What is that LIBOR scam? What happened? Everything we will discuss there. But here, let us put it on a main thing. Swaps only, let us concentrate first. See the screen. Microsoft has borrowed at what rate?
LIBOR plus
10%. Floating or fixed? LIBOR is changing or fixed?
Changing.
Therefore, LIBOR plus 0.1 is also changing. Okay, very good. First over. Intel has borrowed at what rate?
Fixed rate.
5. Which rate? Fixed rate. Now tell me, if both are happy with what they have, will they come to swap market?
No.
First thing is, when a question is given, why you came, you should not ask. Their perception, yeah. Maybe Microsoft is feeling that unnecessarily I am paying more. Maybe Intel is feeling that in future rates will fall. Even then I have to pay 5.2%. Like that they may feel. It's all perception. One what you like, I may not like. One what I see in the same way, you may not see that in the same way. Perception changes between people. So therefore, Microsoft want to transform. Transform means what? Exchange. Exchange what? Floating rate loan into fixed. Fixed rate to floating by Intel. Information from question 1 only we have to take and we need to do this. Clear? And calculate the effective borrowing cost. Actually in the study material, 7 pages, one illustration they explained all these. I have broken that into 3 questions. Exam what they are doing? 1 bit they are taking, 5 marks. Like this they are giving an exam. Recent attempt also question came like this only. Transformation of assets and liability. But they didn't give only liability there, they give an asset liability. That's why they given for 8 marks. If you do one question on liability, one question on asset, both comes together, you will answer. Clear? Huh? Concentrate, a very new concept we are going to deal with. Okay? Dead easy if you understand. 1 minute time I will give. First read the question and understand the facts. Don't see the answers, please. For those who are having the books, don't see the answers. Okay, shall we? First tell me, what is the real transaction made by Microsoft? Tell me first. Sir, I will show you one diagrammatic presentation. Any question in exam it comes, put it on the diagram, you will get the answer. Okay, first. What are the two companies? First tell me. 1 second. Tell me. Microsoft, Intel. Okay. Now, you see the question and tell me. Everyone participating, see the question and tell me. First, Microsoft originally borrowed at what rate? Floating or fixed? Floating. How much floating? Libor plus 0.1 spread. Spread means profit. Okay. Tell me. Microsoft has to pay its lender. How much? Libor plus 0.1. Correct? Yes, very good. Next. Intel has to pay its lender. Fixed rate or floating rate? 5.2. First tell me. These two transactions happened in the swap world or real bank world? Real bank world these two happened. They are happy or unhappy? How do you know they are unhappy? Or else why they will come to swap? Unnecessarily why I will exchange when everything is going good? Are you understanding or not? Now tell me. Who is giving whom what rate is a question now? Tell me. Microsoft is happy with floating rate or unhappy? Therefore, it wanted to pay in which rate? Answer? Pay that to Intel. Which rate? Fixed rate. How much is a fixed rate? 5%. 5 yeah? How much? No. 5.2 is the bank rate. Previous question you have to link this question. 5%. Sir, listen again. You missed the link. Tell me now. 5.2 and Libor plus. This is the problem with swap chapter. That link will be gone. Bank market la I am borrowing at a fixed rate of 5.2. Correct? Intel. Microsoft borrowing at 11 Libor plus 0.1. Correct? Those two are in which market? Real market. Which market? Bank markets they entered. Bank market, swap market, both are same or different? First tell me. Different. Same or different? Then how can you quote the bank rates in the swap market? This is the bank deal. This is the swap deal. Clear or not? Okay. So, what is the bank rate? Microsoft bank rate. Libor plus 0.1. What is the Intel bank rate? But swap ki bank rates will apply, swap rates will apply. Swap ki separate world is there, separate rates are there. Listening or not? Okay. See the previous question. I will show you. Previous question you see and tell what is the fixed interest rate? 5%. Answer? 5%. What is the floating interest called as? Libor. Libor is the floating interest. Don't tell Libor plus 0.1. Libor plus 0.1 is bank rate. Don't get confused. Is the confusion a problem? Do you understand the question? Yes, sir. How many transactions are happening? Two. Number 1, bank. Number 2, swap. Bank what I entered is Libor plus 0.1, Microsoft. 5.2, Intel. Over. Those are two different transactions. They are happy and unhappy. Therefore, they wanted to exchange their positions now. Exchange their. I invested in TCS. I am selling, means I am happy or unhappy. I am unhappy with TCS. This is the rate at which I can sell. I will go out.
Yes.
Listening, the person buying it is percepting more share price to come. Like that, my mindset and another mindset, opposite mindsets met together. Always in stock market, like-minded people won't match. Unlike people only will match. Clear? Now tell me, Microsoft is wanted to pay fixed or floating?
Microsoft
Wanted to pay. What it is doing, I am not asking. It want to pay fixed or floating? Real market, can you do that? Therefore, in which world you should do swap? Swap world, which rates will be there? Swap rates. What is the swap fixed rate? 5%. Question is on based on question 1. Okay, na? Next. This is important. Intel is already paying which interest? Answer. Fixed interest. But it wanted to pay what? Can it pay in the real life? Do in the swap world. Okay. Tell me. It has to pay in what? Libor. That Libor can be 4.2, 4.8, 4.9. Some rates they have given. Those rates will apply. Sir, I can't write 4.2 like this here because Libor will change. Libor, that's all. Understood? 5 will change or will not change? But Libor will change. September 10, 2009 or some day, it is 4 point something, 2. Next it became 4.8. How can I write that number here? Therefore I am writing Libor. This is the beauty of the swap. Tell me, Microsoft want floating or fixed? No wrong answers expected. Floating or fixed? Intel want?
floating.
Kada? But really they can do that? Then therefore they enter into which market? Now whether their intentions are satisfied or not, let us see. Beauty we will see there. See there. Position of Microsoft. Microsoft will pay na receiver L plus 0.1. Pay na receiver? Pay. What is that? L plus 0.1. Next question. Microsoft will pay fixed rate to Intel. See the diagram Intel, yeah? Yes, Microsoft will pay to Intel how much? 5%. Correct? Next, Microsoft will receive Libor from Intel. Correct? L. Tell me the net position. These two are payment, this is receipt. L plus 0.1 plus 5 minus L. Receipt is a negative here. Minus L plus L cancel. How much it is? That's all. My liability has been turned into fixed now. That's how the swaps will help. Originally, what is my position? Yeah, floating. But I want what word? Fixed. Really possible? But net really my liability has become fixed now. Understood the swap transactions, how they work. This is called as a transformation of liability. Mine is a floating rate liability, but now turned into fixed rate. Who changed it? Swap. Who changed it? Swap is the beauty. Sir, okay. Now will you tell the answer for Intel? At least try there. Tell me. Intel, first tell the payments because we are in payment market. Okay. First tell me, pay to the banker or to the lender. How much? Very good. Next, I will pay to the Microsoft also. How much? Libor. Next, I will receive 5% from Microsoft. Correct? Now tell me, how to write this? 5.2 plus Libor minus 5. Correct? Tell me now. Libor plus 0.2. That's all. Floating like it changed. Did you get the point or not, everyone? That's all. See the answer. That's what I have written in the diagram as well. See the answer up to here. Don't see the answer below. First give me one answer. Understood the concept clearly. How swaps are actually working. Really you can't do anything. Sir, once you take a fixed rate loan, which fool will tell, come and take floating? It is a loss for them or not? Okay. This question is on lender and borrower between only swap happened. Next question also we will do. Next question, exam 8 marks questions are there. Those are asked on the swap dealers. Means, sir, Intel and Microsoft in this question we are assuming that they match it together. But how come two companies will come together like this? There should be some mediator or not. If mediator comes, the entire story will change. On that 8 marks questions are coming. I will show you how the questions are coming. Are you comfortable up to here? See the answer once. We'll go to the next one. So those joined live, please put a feedback whether you understood the example clearly, the question of ICAI. If understood, please put yes. Okay, shall we continue further? Up to here, everyone had clarity, yeah? Yes, let's see the next part. See here, not only that, he is asking, also show the effective borrowing cost to whom? Both the companies after the transformation. Sir, you tell me, first you tell me the Microsoft situation. Intel, I will show the answer directly. Okay. Problem number 1 base we need to take. Tell me what are the dates. Please participate. 5/9/2010, 5/3/2011, 5/9/2011, 5/3/2012, 5/9/2012, 5/3/2013. Correct? Tell me. I am taking whose obligation? Answer. Intel. But before even going into that, I borrowed money. Originally, I borrowed money from the banker at a rate of LIBOR plus 0.1% or not? Answer. That means technically I have to pay LIBOR plus 0.1% or not technically? Yes or no? Okay. I have taken obligation of whom? Answer. Intel. Sir, answer me. 3 points I have written. Pay to the lender LIBOR plus 0.1. And next, pay to the Intel 5. You should write it as 2.5. And receives from Intel LIBOR. First, everyone please, one last time tell me, Microsoft wanted to convert what into what? Fixed into floating or floating into fixed? Answer. Okay. First tell me, with the banker, how much Intel has to pay? Think and answer at respective dates. LIBOR or LIBOR plus 0.1? LIBOR plus 0.1. Originally with the banker, Microsoft has to pay. I said Intel. Sorry, I'm very sorry. Microsoft has to pay LIBOR plus 0.1 or not? What is the LIBOR on the first date? 4.2. 4.2 plus 0.1. How much? 4.3 divided by 2. How much it is? 2.15. Correct? 2.15 is outflow na inflow na? Inflow na? Very good. Next, like that. Please tell the answers one by one. Next one is how much? 4.8. 4.8 divided by 2. How much it is? 2.45. Okay. Next. Add 0.1 and tell. 2.7. Others also please do. 2.8. 2.85. Others also please do and confirm. Correct? Sir, okay. Sir, these are all payments made by whom to whom? Microsoft to the banker. At how many intervals? 6 months intervals we are paying this. Correct? So, see here once. Payment to the lender for all the 6 situations. Had we calculated or not? Microsoft is originally in which situation? Floating or fixed? That's why rates are changing. But it wants this to change or not to change? Not to change. It wanted to make it fixed. Therefore, what it entered? Swap. In swap, I have to pay how much to Intel? We have done 5%. That means I will pay the fixed and I will take the floating. Tell me, what is the payment made to the Intel? 2.5, 2.5, 2.5, 2.5, 2.5 and 2.5. This is a payment or receipt? Payment. Next. I will also get a Intel receipt. Correct? How much I will get? Libar I will get. What I will get? Libar. Tell me. 2.1, 2.4. I will write in brackets 2.65, 2.75, 75, 2.8, 2. These are all receipts or payments are receipts. Sir, everyone take calculator. 2.15 plus 2.5 minus 2.1. How much? 2.55. Correct? Next. 2.45 plus 2.5 minus 2.4. How much? 55. Next. 2.7 plus 2.5 minus 2.65. How much? Like this all the years. How much? That's all. My liability is transformed from floating to fixed. This is the beauty of swap. Understood the point or not? That's how the swaps are creating sensation in the interest rate markets. Okay? That's why institute is so eager to ask the questions in exam on the swap transactions. That means tell me, originally I started with which transaction? But I want which one? I have changed it or not? Really also my net will be only this much. That's all. That's how swaps became very, 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 very popular in the world. Shall we move on to the next one? Okay. Sir, I have anyway given the answers now. Can you check the Intel later?
Yes, sir.
Later you check the answers. Intel. Same schedule like this we need to do for Intel also.
Yes, sir.
Shall we go to the next one? Take this question. Take question number 3. Take question number 3. Please read the question properly. Microsoft has invested. Asset or liability? Asset. Invested in what bonds? Fixed rate bonds. Please think properly when you are reading the question. Thank you. Read the question first.
Sorry, I can't read that on app.
Hey. Everyone over the live, read the question. Can you move on? Everyone here? Did you read the question?
Yes, sir.
Really, did you read the question? Asset or liability? It is transformation of assets. Because we have borrowed money, invested money. Invested money. Let's see how it look like. Okay. See here. Microsoft invested in fixed rate bonds. Of what rate? Previous question of borrowed in floating. Invested in fixed. Next one question is there. Exam one torture question. Do you know what they have done? Recent attempt 2022 if I am not wrong. In the same question they have given asset to liability with swap dealer. Like this sound has come in exam hall. One question is there also on that. All worst questions will come in exam. Na? Generally what people will expect when they go to exam, transformation of asset to liability they will expect and go. One question they have given asset, liability, swap dealer, swap commission. Everything was given in one question. 8 marks, 7 marks somewhere. One question was asked. Sorry, okay. It will happen. That's the CA. This is floating first. CA ne petta floating interest. We need to do some swap to this. So swapping is CMA. But no one will be taking my pass certificate. Na? If you pass by your pass certificate, I can't take. See there. Microsoft has invested in the fixed rate bonds. What is the rate?
4.7.
Very good. Intel invested in a floating rate bond. Libar minus 0.25. Sir, there is no rule that always Libar should add with the spread. It can also be reduced with the spread. Why it will reduce here? Shall I tell you why? Company credit rating is fantastic. CIBIL score outstanding. They want those customers. Therefore, what they will do? Prevailing Libarki we will reduce 0.25 and give. Higher interest rate is an indicator of worst performance. Get the point? I have taken a housing loan. Okay? 6.9% I have taken. My CIBIL score is fantastic. Really also. Because I pay credit card payments on time. I take loans and pay on time. EMIs will be paid on time. Discipline will be there in investment. CIBIL score is fantastic. They will give it 6.9. If your CIBIL score is below 900, 840, 830, slowly they will hike the rates of interest. Are you understanding? If your CIBIL score is worst, 600, 620 like that, they will charge 8%, 7.8% like that they will charge on housing loans. That means, if my credit rating is very good, they are ready to compromise the interest flows or not. Why? Because chance of becoming NPA is very less. Chance of becoming? That's a gain to them. Okay, sir, okay. See then. What is the floating rate interest? LIBOR minus 0.25%. First tell me, real world or swap world? Real world. Really they invested in fixed rate bonds. Really Intel invested in floating rate bond. First tell me, they are happier, unhappier? They are happier, unhappier? Obviously unhappy. Because of that they wanted to exchange the positions. Position exchange will be made in which world? Swap world. In the real world you can't do anything, already done. It's a sunk. Now suddenly I got one thing, one point. So what are the two options available? I said, beginning when I started, there are two options to exchange this. Number one is swap. Do you know what is number two? Whenever, sir, for example, I took loan. Which loan? Fixed rate loan. Which loan? Fixed rate loan. I took at 9%. Market rates are falling to 8. People will happy to take floating rate or fixed rate now. Floating. There is second option. Do you know what is it? Callable bonds. Bond valuation we have done. Sir, bond valuation done 15 days, 20 days back, sir. I forgot everything, sir. Callable bonds means they will issue the bonds at 14% in that question. But market rate came to 12%. Array, flotation cost and issue of new bonds, overlapping interest, one question also we have done in bond valuation. Sad thing is, at least you are not saying yes that I completed it. Remember the concept, yeah? Callable bonds concept is there. That is one option. But callable bonds, there is a difficulty. Lot of premium payments. Okay, there is a lot of flotation cost, and moreover, the issue should be made as a callable bond. All these constraints will stop me from having a callable. At that time, this will help you. Okay, sir, okay, leave it. But I got a thinking that I want to share with you. Sir, okay, point number one. Here we are having asset transformation, liability transformation. Why we are investing or borrowing? Answer? So, everyone take your book. What are the rough book you are maintaining? Everyone listening to the live also, draw the diagram first. If you draw diagram properly, 90% success rate. Success rate is 90% to do the answer correctly in swaps. Who are the parties involved? First tell me, I will write. You also please write, don't sit idle. Microsoft, second party, Intel. Okay, na? Diagram if you do correctly, a 90% success rate, swap chapter. Tell me, Microsoft is receiving interest or paying interest? Arrow mark this side. Okay? From the investor. Previously lender. Or issuer you call. That issuer issued, I invested. Correct? This issuer is giving Intel what interest? Okay, first write down the rates. 4.7, LIBOR minus 0.25%. LIBOR minus 0.25%. LIBOR minus 0.25%. Okay. First tell me, they are happy with the existing positions or unhappy? Therefore, they enter into which market? Swap. What they will do? Tell me. First, Microsoft wanted to receive floating or fixed? Wanted to receive floating or fixed? Floating. Microsoft, Intel wanted to receive? Therefore, Microsoft wanted to receive floating. Floating means what? LIBOR. Intel wanted to receive? Fixed. How much? 5. Hey, don't take 4.7. 4.7 is in which market? Banking market. Okay? Understood? Okay. 1 second. Those in live, whether they are following. Sir, everyone in live, are you following the answers? Okay. Next. Sir, up to here, did you understand the diagram how to draw? Everyone. Now tell me, can you do on your own and tell me what is the net asset of Microsoft and the net asset of Intel? Can you tell? Write down. Microsoft. Tell me. First, Microsoft is receiving how much? 4.7. From whom? Issuer. Very good. Next, one receipt. Receipt number 2. From whom I am receiving again? Intel. How much? Libar. How much? Libar. Okay. Now, number 3. I am paying how much? 5%. Tell me the net. 4.7 plus Libar minus 5. Libar minus 0.3. Now tell me, Microsoft originally is in which position? Answer, yeah. It want what? Floating, you change it now. Listening. Clear? Next. Intel. Intel position also you tell me. Intel. It will receive. Okay, it will receive. Receive from whom? Issuer. How much? Libar minus 0.25. It will also receive from Microsoft. How much? 5%. It will pay how much to Microsoft? Libar. Tell me. Libar minus 0.25 plus 5 minus Libar. Minus Libar plus Libar cancel. How much? Tell me. Intel original position is what? Floating. It want what? Fixed. Converted. Listening, how simple the chapter will be if you understand. People are not understanding this, what is happening, why receipt, and moreover, institute is not presenting in this way. No diagram. They are writing one theory answer, below they are putting one formula type, they are giving answers. So what is happening? What student will think? What is bank market? What is swap market? That there are two markets first. Clear? That clarity is required. Na? The clarity is a very easy chapter. Yeah? Unnecessarily we make them heroes. Actually, they are not. One or two important difficult concepts are there, that I agree. But chapter swaps means you need not worry about it. Shall we move on to the next question? Understood or not? See here. Check the answers whether they are right or wrong. Can I move on to the next one? Okay. Now, most important 8 marks question came. Be very careful. Situations are going to change. Hello everyone. See here. Question number 4 came for 8 marks. Question 5 also came for 8 marks in exam. See, this much explanation I have given here. Later you can read. I will whatever I have written here, I will explain in the class. Okay? Okay. First, see here. Target in the next 20-25 minutes. Question number 4 and question number 5. I promise you in a minimum 8 models we will do. We will do. Read the question, very important. Microsoft has borrowed money at a floating rate. I just changed the name here. They have given some HEPZ and some name they have given. For continuity in the discussion, I use the same word Microsoft in all questions. I changed them. Okay, no worry. Microsoft has borrowed money at what rate? Floating rate of Libar plus 0.1%. Intel has borrowed at fixed rate of how much? 5.2. Microsoft wanted to transform its floating rate loan into fixed rate loan, and Intel wants to transform its fixed rate loan to floating rate loan. A financial institution now came. Now dealing is not between Microsoft and Intel. Dealing is between Microsoft with the financial institution Intel with the financial institution, there is a swap dealer. There is a
Swap dealer.
obviously what he will charge.
Commission.
That's all. That's why he is telling 0.03% commission is charging. A financial institution is quoting a plain vanilla fixed to floating rate swap with a spread of 0.03% as follows. Vanilla has nothing to do with, vanilla means normal bond. Okay. Next. Swap bid. See the technicalities will start. Swap bid 4.985% for 6 months. Next. Libor swap offer 5.015% for 6 months Libor. State the transactions Microsoft and Intel has to enter to transform their liability. What is the effective interest cost on their borrowings after transformation? What is the default risk premium that the financial institution is charging on swap agreement? 8 marks question. First you do one thing, read the question first. I will make it full screen. Take a minute time, please don't be in different world. Read that question. Live students also please put me a message. Are you comfortable up to here? Please put me a message. Are you comfortable up to here? It's clear. Understood up to here? Up to here, clear? Read the information given below. That's very crucial information. Shall I continue? Okay. So let's begin. Let's start the discussion. Question seems to be like previous one only. Correct? Question seems to be like in previous one. But there is a lot of difference. Because we are not exchanging swap between two participants. We are exchanging the swap through a intermediary. Who is that intermediary? Financial intermediaries. We call them as swap dealers or a bank. We call them swap dealers or a bank. Books uses the word big banks. Our study material use the word big banks. Okay. Some books uses the word swap dealers. I use the word swap dealer for convenience sake. Okay. See the query first. Let us read it together one last time and solve. Tell me. Microsoft is in borrowing position or lending position? Borrowing at what rate? Can we draw the diagram for the original transaction or not? Tell me, I will draw here itself. Microsoft is having borrowing or depositing? It is paying or receiving? Paying. How much? Libor plus 0.1. Up to here clear? Next. There is another company. What is that company? Intel. Intel has to pay whom? Their lender. At what rate it has to pay? 5.2%. Both are liking their existing positions or not liking? Tell me. Original position of Microsoft is? Original position of Intel is? What Microsoft want? Fixed or floating? Fixed. What Intel want? Both of them are combined using a dealer now. Combined using a dealer. That fellow we call as a swap dealer. What we call them? Swap dealer. What you wanted to do with the dealer now. Don't do with the Intel directly. Do with the dealer. Directly do with the dealer now. How the transaction look like? Tell me. What really you want? What really Microsoft want? Let us first discuss about Microsoft, then we go to Intel, lastly combine both. Okay, tell me, what really Microsoft want? Fixed. Tell me, it is paying floating or fixed now? Paying floating or fixed? It want to pay in? Pay in fixed now. Pay in fixed. Sir, tell me, paying in fixed means technically receiving in LIBOR. Previous questions also, what we have done? We are paying to Intel at fixed means we are taking the LIBOR obligation of Intel also or not? Listen, sir, this I wanted to stress. There are different markets. One bottle equal to 10 rupees I have 10. I said one bottle equal to rupees 10. From this what you have to understand, bottle is a commodity priced at 10 rupees, correct? Correct or not? In real market, tell me, I bought a water bottle. I bought a water bottle. Now you answer my question now. I bought it. Now tell me, what activity I have done? 10 rupees, one bottle I bought. Tell me, what activity I have done? I purchased what? Purchased water bottle. Will you tell I sold rupees? No. But really it was done. Really it was done. I sold rupees, 10 rupees and I bought a water bottle. But always we will tell only from whose point of view? Commodity point of view. Not buyer, yeah. Even if you ask seller, and seller will tell I purchased rupees. I sold water bottle and he will also tell. What is the commodity here? Answer. Likewise, LIBOR is a commodity. LIBOR is a commodity. You want LIBOR means you have to buy the LIBOR. Are you understanding or not? You have to buy LIBOR or you have to sell LIBOR. LIBOR in the swap world is a commodity. First keep that in mind. LIBOR is a commodity. LIBOR is a commodity. LIBOR is a commodity. That commodity should have an opposite pricing or not. A pricing is 4.9, 5.5 like that. That means you are buying LIBOR means you have to pay fixed. You are selling LIBOR means you have to buy the fixed. I told you swap chapter la interests are exchanged with interest only. Floating fixed changed to floating exchanged with fixed, fixed exchange with floating.
Yes, sir.
Water bottle exchanged for water bottle? No, it will exchange for money. But swap market it doesn't happen like that. LIBOR I will not sell for rupees. LIBOR I will sell for another interest rate. LIBOR is fixed or floating?
LIBOR floating.
Floating will be exchanged with fixed. That's why they have given this. Bid. Sir, tell me, you have to do the transaction with the Intel, with the swap dealer. Swap dealer has to get some gain or not? Yes, answer, yeah? Get the gain or not? How to get the gain? He will get the gain by selling at higher rate, buying at a lower rate. Bid is called as lower rate. Bid is called as lower rate. Tell me, at what rate he will buy? 4.985. At what rate he will sell? 5.015. Our difference is 0.03. Understood? Now read the question. Now you understood the idea behind this question or not? Now read. After that we will start doing the question. Understood how questions will come in swaps now? That's why it is complicated. Student will call for one reason. Proper explanation is not there in study materials. Students are not understanding what is going on there. Sir, read first. Read the question. Swap bid means what? Please tell me. Swap bid means what? Purchase. Who is purchasing? Intel is purchasing. No. Who is purchasing? Swap dealer is purchasing. Purchasing at lower rate or higher rate? Lower rate. Sell at a higher rate. Now I ask, what he is buying and selling? Chocolate? Interest. LIBOR. LIBOR is bought, LIBOR is sold. LIBOR bought against one rate. LIBOR sold against one rate. What I bought? What I exchange? Rupees. Like that. This is LIBOR. LIBOR I have taken. What I should give? Some interest rate I should give or not? LIBOR I am taking, I will give fixed. LIBOR I am selling, I will take fixed. Always I am completed to explain. Understood? 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 Yes, now listen. Sell LIBOR means I have to throw LIBOR. Suddenly, sell LIBOR means I have to throw LIBOR, correct? Yes, Answer, yeah. Sir, tell me, I have to pay Libar. Means Libar should go out of me or come to me. I want to pay Libar. Means Libar should go out of me or come to me. Go out of me. If it has to go out of me, I should sell a buyer. That's all. Answer over. From this only we have to start this answer. If you have this clarity, chapter will be completed just like that. Shall we start doing it? Tell me now. You tell me transactions, not me telling the answers. Microsoft original position is fixed or floating?
Floating.
Answer.
Floating.
It is happy, unhappy? Unhappy. Therefore, it want to go to swap dealer and swap its position. Swap its position. With whom? With Intel or swap dealer? Do you know one point? Here in this question, Microsoft don't know Intel, Intel don't know Microsoft. Between them, who is standing? A swap dealer is standing by charging a commission. How the commission came also I shown you now. Okay, tell me. Microsoft wanted to exchange a fixed rate obligation or floating rate obligation. To which what? Fixed rate. Now tell me, it wanted to pay in Libara, not to pay in Libara. It wanted to pay or not to pay? Not to pay in what? It want to pay in fixed rate. It want to pay in. It want to pay in fixed rate means, pay means you have to sell the fixed rate. Means you have to buy what? We want to buy what? Libar. You have to buy Libar by selling the fixed rate. Correct? Buying Libar means you will buy at a higher rate or lower rate. You have to buy means bank has to sell. Start from the beginning. Small confusion, don't continue. Start from the beginning. What is the original position of Microsoft?
Floating.
It want floating or fixed.
Fixed.
Means it wanted to pay in Libara, receive in Libara, receive in Libara. Listening, means it want to pay in. You can pay in fixed only if you take something in return. What is that return? Libar is a return. Again I am telling, interest can be exchanged to the interest only. Floating will be changed to fixed. For fixed you should give floating. Listen. Swap world what you wanted to do? You pay in fixed or floating? You swap world you want to pay in fixed or floating? You pay in fixed means you have to receive in floating. Floating means what? Libar. Listening? Tell me. You wanted to receive Libar. You want to receive Libar. Sir, receiving Libar means Libar coming to me or going out? Coming to me means I have to buy or sell. Answer. Swap dealer has to sell at a higher rate or lower rate? That's all. What is the rate applicable to the Libar exchange? 5.015%. Clarity or not, everyone? Intel you should tell, I should listen. Tell me. No wrong answers. What is the original transaction of Intel with the lender? Are they fixed what rate?
5.2.
They are happy, unhappy?
Unhappy.
It wanted to pay in fixed, it wanted to pay in floating. Floating means which rate? Ade, floating means which rate? Libar. It want to pay in Libara, receive in Libara? Answer, yeah, it want to pay in Libara, receive in Libara? Originally it is paying in? Now it want to pay in? Floating. Floating means what? Libar. I want to pay Libar means, I have to, means Libar is going out of me or coming to me? Pay in Libar means going out of me or coming to me? Going out of me. That means I wanted to pay in Libar means I have to sell Libara, buy Libara. Sell. Understood? Repetition one more time. See here. Original position of Intel is what?
Fixed.
Fixed or floating? At what rate?
5.2.
It want to pay in fixed, it want to pay in floating?
Floating.
Answer. I wanted to pay means Libar has to go out of me. Means I have to sell the Libar. Listening? If I have to sell the Libar, what the swap dealer has to do? Buy the Libar. So therefore, tell me, at what rate he has to buy the Libar? Tell me. Answer, yeah? 4.985. Sir, I am paying in Libar means I am receiving the floating. Sorry, fixed. How much is the fixed rate? 4.985. Here, how many transactions are created totally? 6 transactions are created. Okay? You see them. I will re-explain one last time for everyone's clarity. See the diagram first. If you have any doubts, you can ask. All this in exam hall, no one will be there to tell what is happening in transaction.
Intel point of view more.
I will explain. Microsoft point of view, everyone understood? Then there is no chance that you should not understand in Intel. Concept is same. But I will explain one more time, no problem.
While getting some, they can negotiate with the bank and get a fixed or floating. Why they are
No, in the middle of the journey only all these changes will come.
Yes. Oh. They will not be able
Arey, on the date if it is there, why I will go for fixed or floating? I will go which is beneficial to me. I will start with floating or fixed, treating that it will be beneficial. Suddenly in the middle of the journey, doubtful. Then swap transactions will help you. From the beginning day, no one will do. Sorry. Understood up to here? Shall I re-explain? Microsoft understood? Microsoft. I will re-explain from Microsoft. Listen. No problem. See there. First, what is the Microsoft's original position?
floating.
Floating or fixed?
Floating.
What it want to do in the swap world? Fixed or floating? Fixed. It want to pay in fixed. It want to?
Pay in
So receive
Libor.
in floating. Floating means what rate? Libor rate is a floating. I wanted to receive Libor means I wanted to buy Libor or sell Libor. Buy Libor. If you have to buy Libor, swap dealer has to sell. Sell at lower rate or higher rate? Higher rate. What is the higher rate here? 5.015. At that rate fixed will be shifted. Means if you pay 5.015 to me, I will exchange it with the Libor. Understood or not everyone? Understood? Tell me. In the real world, Microsoft original position is fixed or floating? Floating. Swap world it wanted to exchange its Libor with the fixed rate. Okay na? Means it want to pay in fixed. Paying in fixed means opposite what is happening? Receiving the Libor. Receiving Libor means Libor coming to be a going out. Coming. Coming means I have to buy Libor or sell Libor. Buy Libor. You have to buy means swap dealer has to sell. Sell at a higher rate or lower rate? Higher rate. Up to your clarity. Next. Intel let us see in the same way. Okay, apply this properly. Important. Intel original position is fixed or floating? It is paying in fixed, but it don't want fixed. It want to pay in what? Floating. Now listen. Floating means what rate? Libor rate. Pay in floating means I have to sell a buyer. Answer. Sell. It has to go out of me. Means I have to sell Libor. Selling Libor means, try to understand, you sell Libor. Bank has to buy Libor. Bank buys at a lower rate. That's why lower rate is applicable. Understood or not everyone? Okay. Now tell me. If you observe straight away how the banker is making a gain, you see the screen and tell. Banker is selling me Libor at what rate?
5.0.
See there, yeah. Microsoft you tell. Microsoft to Intel, see it as a one transaction now. From Microsoft, it is selling Libor and buying, it is selling Libor at what rate? 0.15. For Intel, it is buying Libor at what rate?
4.985.
Straight away it is making a gain. That's the margin they are saying in the question. Understood or not? Okay. Now tell me, what is the Microsoft's net position? Tell me all the transactions you should tell me. First, tell me from the Microsoft point of view. Tell. Pay na receiver first. Pay. Tell me how much? Libor plus 0.1. Next, pay. Pay how much? 5.015. Next, receive how much? Libor. How much? Libor. Tell me the net position. Libor plus 0.1 plus 5.015 minus Libor. Minus cancel. Tell me. 5. How much? 5 point? Originally what is the Microsoft position? Floating or fixed? It want what? Fixed. Clear? Next. Tell the Intel position like this. Pay. See from here, this point of view you should see. Pay how much? 5.2. 5.2 is paid to the swap or banker. It will pay.
4.985.
It will see there. It will not pay 4.985. It will pay Libor. Next, it will receive 4.985. Correct? Tell me now. 5.2 plus Libor minus 4.985. 5.2 minus 4.985. 0.215. Correct? Libor plus 0.215%. Libor plus 0.215%. Tell me, what is the original position of Intel? Fixed. Now the transformed position is what? That's all. We transform the assets into, fixed assets, fixed interest loan into floating and floating rate into fixed. Banker has made a straight gain of 0.3%. 0.0. By mistake he has found. But concept understood with everyone means 5.015 minus 4.985. Directly how much? 0.03%. That's what he has given in the question. Sir, everyone understood the question clearly, yeah? Understood? Answer also understood clearly. Libar concept understood. Tell me one thing at the outset. First we need to understand in swap only one thing. What is happening in the transaction is important. Tell me. I wanted to pay in fixed rate. Means what? I wanted to pay in fixed rate. Means what? I have to pay. Means I have to sell or buy or sell. Means opposite what you need to buy. Libar you have to buy. For Libar this exchange will be done. Listening, I wanted to buy water bottle. That's all. I wanted to buy water bottle. I wanted to buy what? Exchanging what you are buying? Money. Like that. Libar I want to buy. Libar I want to buy. What you are exchanging for Libar? Fixed rate you are exchanging. Understood? Understood? See the answer one last time. If you have a doubts, you ask. Sir, very 8 marks question here. That means swap questions, if you at least understand now, they are not asking for volume of answer. They are asking for the thinking. How student is thinking is important for this. Students joining live, please put a message. Understood? Understood the transaction. Can I go to the next problem? Can I move to the next question? First, everyone understood this question clearly? Everyone? Question number 5. More worst question than before. Let's read. But if you properly understand, dead easy. See there. Read. There are two firms, A and B. Firm A has invested $100 million in fixed rate bond yielding 8.5% interest. Firm A is not highly rated firm and it has raised its loan for funding its assets through floating rate from the bank at an interest rate of LIBOR plus 0.5%. Firm B has invested same $100 million in floating rate bond yielding LIBOR plus 0.75% and it has raised its loan for funding its assets through fixed rate loan from a bank at 6%. There is a big bank which offer interest rate swap with a spread of how much? 0.1% as swap bid 6.4, swap offer 6.5, difference a 0.1 they are charging as a commission. Explain how two companies can reduce their interest rates, calculate the company's lock-in spread. Read the question first. 1-2 minutes time. Observe the question, numbers, everything. We'll start. In the meanwhile, you give a try as to how to do. Don't sit idle, don't just see the answer. Everyone also in the live, try for the answer first. Okay. Shall I start? At least did you understand question?
Yes, sir.
What is the difference you found between this question and the questions we have already done? Whatever we have done, the past 4 questions we have done. Why this has come for 8 marks? Can you please tell me the reason? Because in the same question what he has given, asset, liability both are there. Liability in one rate, asset in another rate. Same also for another company. Correct? Let's see. There are 2 firms A and B. Sir, after this we have to do another 3 problems. Okay? Na? Another 1 session also I will take for swaps next, immediately tomorrow. Then we will be doing the remaining problems as well. With that full clarity will come. Understood? One hybrid instrument question is there. 10 marks question came. That also we will do. Okay. Sir, okay. Anyway, see this. There are 2 firms. What are those? A and B. A has invested $100 million in the fixed rate bonds, yielding 8.5% interest. Firm A is not a highly rated and it has raised its loan for funding its assets through floating rate from a bank at an interest rate of LIBOR plus 0.5 and invested at LIBOR, and firm B has invested floating rate at LIBOR plus 0.75 and the rate of loan is at 6%. First tell me, how many participants are there? I am not asking about the swap dealer. Normally, how many participants are there? How many? 2. Who are they? A and B. How many positions they are having? They are having only 1 position or 2 positions are. 2 positions are there. Both are having investment to loan. That person also have investment to loan. Listening?
I didn't.
Listening or not, everyone? What is new about this question? First, let me tell you. Here, swap you will enter through whose point of view? Loan point of view or investment point of view will enter into swap. Both if you enter, both will knock off with each other because both will give us the same answer. I will show you how that also will happen. Because, sir, you are having a fixed rate of floating rate as an investor. A I am talking, firm A. Fixed or floating? Fixed. You will transform into floating. That is as an investor or lender? Borrower or investor? Investor. As a borrower, you are having floating or fixed? Floating. Answer. Floating. Now, please apply your brain. Without diagram, you tell. Number 1. Investment, you are having original position what? Fixed. You want to transform into? Floating. Answer. Floating. That means, actually you are receiving fixed. You want to receive what? Floating. Yes, sir. You want to receive? Floating. Now, keep it in mind. One block of mind, you keep this. Firm A has to receive in LIBOR. Has to receive in LIBOR. Actually receiving in? Fixed. Now I want to receive in LIBOR. Okay, one slot you put that. Second, you are also having a borrowing or not? Yes. You borrowed in fixed or floating? Floating. Answer. Floating. You want to pay in floating or not to pay in floating? Not to pay in floating. Answer. Not to pay in floating. If you don't want to pay in floating, you want to pay in fixed. Pay in fixed means receive LIBOR. Again here also you are receiving LIBOR, yeah? 2 times you will do the same LIBOR transaction. That's why brain la one slot keep that I said. Start again. Tell me. Originally for your investment you are receiving LIBOR or paying LIBOR. Sorry, you are receiving fixed or floating? Fixed. You want fixed or floating? Floating. Answer. Floating. You want floating. When you want floating, what you have to understand? You have to receive floating. You have to receive. Actually you are receiving? Fixed. How much? Tell only about A. B leave off. You are receiving fixed or floating? Fixed. But you want to receive? Floating. Really can you receive in the swap? Swap key you will receive LIBOR. You will receive LIBOR. Keep it one side. Receiving LIBOR. Over. Okay na? Next. You are also having a borrowing or not? Yes. You borrowed it? Floating. You want to borrow it floating or fixed? You borrowed it floating original. But in swap world you want to borrow in fixed. You want to pay in fixed. Pay in fixed means you have to receive in floating. Already there you are receiving floating or not? How many times you will receive? It will result in doubling effect. That's how they framed question in exam here. No, you cannot do because all are done by one single party only. Are you understanding or not? Swap world really transaction happen will not happen. Then why you are doing double times, double notional principle will apply. And at the last, both are having similar effect. Both will cancel each other. Yellow, we are cancelling. Like that, both will cancel. That's how question was framed. Beja fry and brain fry. So, like that question was given in exam. Yeah. First thing is, you should do only from one position point of view only. When question comes like this, don't do from both angles. Investor ki and borrower ki, if you do na, both will cancel each other. So what you should do? Only for one you should either take borrowing and do, or either take loan and do. Answers will be same. Because both are taking same positions or not. Yes, tell me, if you are a, now explain the transaction. A is really receiving fixed or floating? Fixed. But I want to receive in floating. But I want to receive in floating. Lender point of, borrower point of view, if you see, I am paying in floating. But I don't want to pay in floating. I want to pay in fixed. Means you have to receive floating. Means Libar. There you are receiving Libar. Here you say you are receiving Libar. Why two times? For one single person, for one single transaction. Hedge should apply on all transaction once. Therefore, this question is called as overall swaps. What is this? Overall swaps. Means double time you should not do. How many times you should do? One time only, any one transaction you do, that will cover others also. So really will it cover other? I will show you the proof. Shall we start doing it? Okay. First, tell the diagram here. And moreover, along with this swap commission is there. Along with this bid ask is there. Other bid and offer. All these you need to put in mind and do in exam. Yes, sir. Okay. Are you comfortable to understand the concept clearly now? Okay. Shall we do? You tell me, I will draw here. First, Microsoft. This is exam question. A and B. Tell me first, A is, originally, A is receiving or paying? Receiving. Receiving from whom? Issuer. Okay, issuer or bank or someone. Issuer. How much? 8.5%. And it is paying also. Correct? It is paying whom? Lender. At what rate? Understood? Yes. Understood? Continue. Next. Tell about B. Receiving. Answer. Receiving at Libar plus 0.75 and paying at how much percent? 6. Receiving Libar plus 0.75 and it is in turn paying lender how much percent? 6%. Copy this first. Copy this in the notes. So the original diagram, if you understand now what we have to do in swap, we will have a clarity. Okay? Copied? So those in live also please put a reply. Are you all comfortable up to here as to the points covered? Are you confident? Okay, na? I think up to here you also don't have any doubt. Shall we move on further? Next, tell me the answer. Take either investor point of view or take either lender point of view and do. Automatically it covers opposite positions also. Shall we do? Yes, tell me. I will do from lender point of view. Lender point of view will do, I mean lender means borrower point of view I will do. Tell me. You are originally paying floating or fixed? See there, yeah, you are originally paying floating or fixed? Floating. I want to pay in what? Answer. Now tell me. I want to pay in fixed means I want to receive in floating. Swap world. Swap world, you want to pay in what? Tell me. You want to pay in fixed. And you want to receive what? Everyone tell me. Receiving floating means I have to buy libara, sell libara. I have to receive libar. Means I have to buy libara, sell libara. Buy libar. Answer. Buy. If you have to buy, bank has to sell. Bank sells at higher rate or lower rate? Higher rate. See the rate.
6.4.
Hey, bank has to sell. You want to buy, bank has to sell. What rate? 6.5. Write down. Understood. Next, tell me. Second transaction, you explain me. Intel originally is borrowing at what rate? 6. Fixed rate. It want to pay in fixed, it want to pay in floating, floating. In swap world or real world? Swap world. So it want to pay in it is really paying fixed. It wanted to pay in floating. It want to pay in floating. So it will receive fixed. Correct? I want to pay floating means I have to sell floating or receive floating. Sell. Bank has to buy. Bank buys at a lower rate. Understood? Understood? You use the common sense and tell me. Arrow marks you see? Arrow marks you see? Okay, wow. Tell me. In the first case, I mean, A point of view if you see. Which point of view? A point of view. A point of view if you see, I am buying libara, selling libara. Answer. Buying libara, selling libara. Buying libara. Okay, at what rate? 6.5. Here, B is selling libara, buying libara, selling. Bank is buying at 6.4. Their bank is selling at 6.5. Gain is 0.1. Correct? Okay. Now, tell me, here, 1 second. Tell me the transaction. Bank is buying, dealer is buying or selling a selling. Here, dealer is buying or selling a buying. Buying at what rate? 6.5. Selling at what rate? Eventually, how much is the gain? Answer over, that's all. Now, shall we create a transaction or not? Tell me here. Now, you tell me. From whose point of view first you need to do? A. From whose point of view? A. A has, there is a borrowing, there is a lending, listening, and there are two swap transactions also. Can we do the net of transactions? Tell me, tell me one by one. Receive 8.5. Tell, next one. Pay libar plus 0.5. Next, pay 6.5. Receive libar. Can we do the net? Tell me. Sir, receiving, I will write in negatives, okay? Tell me. Minus 8.5 plus libar plus 0.5 plus 6.5 minus libar. Minus libar plus libar cancel. Minus 8.5 plus 0.5 plus 6.5. How much? 1.5 minus. Answer. Gain or loss we got? Understood the point? So technically in the interest rate if you have to see, how we have to see this? See here. I will show this in otherwise around. As an interest rate if you see how it look like. Libar. See like this. Tell me, I am receiving or paying? First one. Receiving or paying? Tell me, how much I am receiving? Minus how much I am paying? Libar plus 0.5 I am paying. Correct? The brackets I have to pay. Understood? Next what I am doing? Minus 6.5. And lastly I am getting this. Correct or not? Even in this case, the same answer will come to you at the end. Understood? So, first see the diagram. See the diagram. Okay now? Sir, previously, in all the questions we have done, we got one fixed rate. We got one, sir, one second. Here we are having fixed floating in the overall A point of view if you see. Which point of view? A point of view if you see, there is a fixed floating. Both are there. Therefore, end result you may end up with floating, end result you may end up with fixed. That's why in these type of questions, lastly you are not ending up with floating fixed, you are ending up with a spread, means profit. Means what? Profit. Profit or loss, anything can happen. Listening or not, everyone? Now tell me, did you understand what I said?
Yes, sir.
I will repeat, no problem. Have a clarity properly. First tell me, receipt I will show in negative. Like any other, traditionally we are showing in the same way. Tell me, how to show this? Minus 8.5.
Plus
Next, plus 0.5 plus 6.5 minus L, correct? Minus L plus L cancel. Okay? Tell me now, what will happen? Minus 8.5 plus 7, correct? So technically how much? Minus 1.5. This is the spread charged by them. Listening or not? Over. Next, from the B point of view, tell the answer. B point of view. First, one by one you tell me. First, we will receive a pay na receive. Receive how much? Okay. Next, first tell the receipts. Receive 6.4. Next, pay 6%. Pay LIBOR. Tell the overall result here. Tell the overall result. Receipt negative. Tell me. 6 plus LIBOR. Payments. 6 plus LIBOR. Minus 6.4 minus LIBOR. Minus LIBOR minus 0.75. Minus LIBOR plus LIBOR cancel. 6 minus 6.4 minus 0.75. How much? Minus 1.5. Minus 1.15. Okay, this is the answer. Okay. This is the lock-in spread that they are charging. See here, same. What is the locked-in spread?
1.1.
That means it is a net payment from you. Locked-in spread, how much? 1.1. Because of paying this excess, you are getting your conversion fixed to floating, floating to fixed. Okay. Here, how much you are bearing? 1.5 extra. He is bearing how much?
1.1.
Technically, for the swap dealer, what is the profit? It is selling you at 6.5, buying from you at 6.4, making a gain of how much? 0.1. Okay. So this question, swap conversions he is not asking. He is asking how much spread you are making on an overall basis. That means how much money you are spending to do all these things. 1.5% extra interest if you bear, you can convert your fixed rate interest into floating rate or floating into fixed. Simply, transformation of fixed to floating, floating to fixed will be converted if you spend 1.5% on the notional principal. 1.5% on notional principal if you convert, this will be done. Okay? Sir, no sir, I don't want to do like this. I want to do like previous one only. I will show answer also for that. See there. Separately see the transactions now. Sir, this locked in concept I didn't understand. This is the ISM presentation. No sir, I don't want. I wanted to see whether really fixed is turned into floating, floating is turned into fixed. I wanted to know. If that is your problem, you tell me, I will write. Tell only from investor point of view. Tell me, means from this angle. Okay? From this angle only you tell. I will write. Tell me, you are receiving how much, please? Everyone?
8.5%.
Receiving 8.5. Okay. Now, you are dealing with the LIBOR transaction, correct? You are receiving LIBOR or paying LIBOR? Answer. Okay. You are receiving LIBOR. And you are paying? 6.5%, correct? Tell me, net law what you are doing?
2% plus LIBOR.
Tell me, you are 8.5 receipt, minus 6.5. Tell me what you are doing?
2%
LIBOR plus 2%, not 2.5. LIBOR plus 2%. Correct? So this is as a Investor as a borrower? Investor. As a investor. Tell me as a borrower the same answer now. Tell me. As a borrower. Sir, one thing you tell me. 1 second. Original position as an investor is fixed or floating?
Investor fixed.
Investor original position. Yes, original position is fixed or floating? I want fixed or floating? Floating. Converted now. Previous problems we done like this. We are not doing this problem on position changing. We are doing on overall what is your gain or loss we are seeing. Listening or not everyone? Okay. Tell me. How much? L plus 0.2. Yeah, sorry, L plus 2%. Sir, this is your transformed investment. Transformed. Originally it is? Now it is turned into? Like this can I also do for the other transaction or not? Tell me for the other transaction now. As a borrower, tell me. I will pay how much? Libor plus 0.5 originally. Correct? Next. I will pay in how much? Answer, yeah. 6.5. I will receive how much? Libor. Tell me the net. Libor plus 0.5 plus 6.5 minus Libor. Tell me the. How much? 7%. This is the net payment or net receipt? See there and tell ya, this is the net payment or net receipt? See here, this is a payment or receipt? These two are payments, correct? Answer. These two are payment. We received this. We cancelled. So net is what? Payment. This is net is receipt or payment or receipt? Okay. Tell me the net now. L plus 2%. Plus 2 or? L plus 2% minus 7%. L minus 5%. L minus 5%. Libor rate is 6.5. 6.5 minus 5 is 1.5%. Understood? Like this, all these have come. Okay? So, you got the answer now. Like that only you should. Clear? Instead of doing all these, directly they are showing only what? Locked in spread. Net effect only they are showing here instead of showing the internal transactions. Sir, one thing I wanted to know from you. Tell me. See the diagram. Originally, what is the A's position? Originally, what is the A's position? Borrowing, lending. Both are there or not? I borrowed at Libor plus 0.5. I borrowed at Libor plus 0.5. One person borrowed from me at how much? 8.5. 8.5 is the fixed or floating? I want fixed or floating? Floating converted L plus 2%. Correct? Next. Second, I like to borrow in fixed or floating? I like to borrow in fixed or floating? Fixed. Original position is what? Floating. I want to turn into? Fixed. Get converted 7. Both are turn or not? Previous problems we stopped with this. Listening? In the question, if you observe, he is asking how they will be reducing. First we have to tell this has to be done. He is asking only what? Locked in spread. Overall, how much you are spending on overall notional principal to do all these things he is asking. Listening? Notional principal say 1 lakh. Yeah. How much? Into 1.5%. How much? 1500. You have to spend 1500 rupees in order to cover your 1 lakh worth of receive and payable. Listening or not everyone? Understood this diagram clearly? Yeah? Yes, sir. Do you understand this? That's all. This is the end of question number 5. With this, we completed one stage of discussion on the interest rate swaps. Still there are 2 problems. We are not going. Listen. Still there are 2 types of questions. Those are called as swap arbitrages. Which one? Swap. This is a 12 marks question came in examination. This we will discuss in the tomorrow's class because this requires lot of clarity. Not normal. They mixed 3 types of swap instruments in one question. For the idea, we should clap first for the institute. How questions can come like this? Hybrid instrument, they are called as hybrid swaps. We will see in the next class. See here, what instrument? Hybrid. On hybrid swap instruments, they have given a question. Okay? Sir, I will do one question. Fastly, I will show you how to do also. This is the question. Popular study material question. RTPL, I don't know how many times they ask this question. Around 6-7 times came in exam. Almost around 15 to 20 RTPs I seen this question. Read. Whoever is listening to this class, before that if you have done swaps, you might have seen this question. See the question. This is called as overnight index swap. Everyone tell me, what is this swap?
Overnight index swap.
Overnight index swap. After this, another 2 questions we will do. Okay, as per the word I will complete those areas. Only one area will be left out for us. Sorry, 2. Hybrid instruments, swap valuation. Except that we completed all these. Okay, see there. Question number 15. Derivative bank entered into a plain vanilla swap through an overnight index swap on a principal of rupees 10 crore and agreed to receive MIBAR overnight floating rate for a fixed payment on the principal. The swap was entered into on Monday, 2nd August 2010 and was commenced on 3rd August 2010 and run for a period of 7 days. Respective MIBAR rates were Tuesday to Monday. Because you entered on Monday, na Monday rate you can't take. Entered on Monday. Somewhere in the Monday, 2:30 at the time I entered. So on that day I can't work on swaps. From the next day onwards it will work. Listening? 7.75, 8.15, 8.12, 7.95, 7.98, 8.15. If derivative bank received rupees 317 net on settlement, calculate the fixed rate and interest under both legs. Sunday is a holiday. Work in rounded numbers to avoid decimal working. Sunday is a holiday. Not for classes. Normally he is telling Sunday is a holiday. Swap market. Okay. First, sir, we don't know what is this overnight index swap. First question will arise, na? Oh, totally a new area. Till now we have done only asset transformation, liability transformation, how swap dealer will behave. These things we have seen. This is a question on overnight index swap. First point number 1. Who will enter into overnight index swap? Banks will enter. You and me will not enter. Because for a bank, 1 day interest loss will be in crores of rupees. Understood? Sir, how interest rates are bothering you? Interest rates will bother banks also. Because bank don't fix interest rates. RBI will fix interest rate. How you are suffering because of changes, who also suffer? Therefore, see the question there. See the question there. Bank wanted to receive MIBARA, pay MIBARA. See the question. Receive MIBARA, pay MIBARA. Why? Banks will obviously have fixed interest only, generally. Therefore, it wanted to receive what? MIBAR. That means originally it is receiving fixed interest from the customers, but it don't want fixed interest. Bank is entering into swap deal. Bank is entering into swap deal. Now, who is entering? Koushik Mukhesh, Jack is not entering. Directly say the who is entering into the swap. For bank, every day is important. Because, listen, I told you, LIBAR, MIBAR is of 38 to 9 types of LIBARs are there in India. Worldwide, 31 types of LIBARs are there. How many? 31 types of LIBARs are there. When we come to IRRM, I will explain depth. What is the concept of that LIBAR, MIBAR, etc. So how the rates came, everything. Okay. So in the world there are so many LIBARs. In India there are around 8-9 MIBAR, Mumbai Interbanks. Now listen, daily MIBAR is there, weekly MIBAR, fortnight MIBAR. Like that I told you variants na. This is daily MIBAR. Which MIBAR? Daily MIBAR. Daily MIBAR. First tell me by reading the question. Bank has put its money with the investors. You are all investor. I am bank. I gave money to you. You are paying in which rate? Fixed rate. Answer. Fixed rate. I want fixed or floating. But you will not pay floating. I can't force my customers to play floating. Maximum what I can do, I can swap in the swap market. Therefore, I am asking to receive what? MIBAR. Receive what? MIBAR means floating or fixed? Floating. for a fixed payment on the principal. Okay, it wanted to receive MIBAR against the fixed. So I will compromise the fixed. You give me MIBAR it asked. Swap really we will do transaction net of the transaction. Net of the transaction balance only you will do. Understood the point clearly? See there. How many days this will run? Tell me the days. Tuesday. The first don't start with Monday. These rates are for, this is Tuesday, Wednesday, Thursday, Friday, Saturday. It's not Sunday. That's why he gave. Sunday is a holiday. That means we have to do for how many days?
6 days.
Tell me how many days we have to do? We have to do for 5 days, 6 days, 7 days.
6 days.
Why not 7 days?
Sunday is holiday.
Answer, yeah? Wrong. 7 days we have to do. Saturday rate only will apply. Sunday rate will not be there, but payments will be there. When you take loan from bank, Sundays they are not charging interest.
Included in Saturday.
That means what is the rate on Saturday? 7.9. That will apply for 2 days, Saturday and Sunday. Listening or not? How overnight index swaps will work? Let us first understand. Overnight index swap, how they work, I will explain. One principal amount will be there. See the question. What is the principal?
10 crore.
Answer. 10 crore. This is not a normal swap. This is the overnight index swap. Behavior will be different. I will tell you how it works. What is the principal?
10 crores.
Answer.
10 crores.
On that, I will apply the floating rate interest. Take calculators. Everyone, whoever is listening, take calculator. 10 crore into, what is the Tuesday's interest?
7.75.
Take it, 7.75%. That's all. One amount you got. That is per annum. We want it for 1 day. Divide by 365. How much?
21,000.
You tell me the number. 21,000?
233.
233. This will be added to the principal of the next day. Added to the principal of the next day. Tell me what is the original principal? 10 crore. On this you add this. On that again second day's interest will fall.
Yes, sir. Okay.
Listening or not everyone? Yo, did you understand? How to do? Tell me. First tell me how to do, how the schedule should be. Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, Monday. Over. Tell me. Principal amount how much?
10 crore.
10 crore. Okay na? Next column.
Interest.
Interest. How to do? 7.75 you should apply on 10 crores. You will get one amount. That is per annum. We are doing overnight swapping. Means 1 day. Okay na? Tell me. Divided by? Tell me, 1 day if you do, what is the benefit to the other person who is selling you swap? Therefore, they charge compounding. You are not here. How much is the principal?
10 crore.
Answer, yeah. Interest some 21,000 you got or not? What I will get if I do that service to you? Yeah? That's why they will charge interest not on the principal. They will charge interest on interest and principal. That's the benefit I will get. Yeah, compounding interest. La. Got the point or not? Now tell me, how much is the principal?
10 crore.
10 crore. First day, how much is the interest? 7.75. Divided by 365, you do. You got some 21,233. Tell me, take calculator. 10 crore plus 21,233. Okay na? Into, how much is the rate? 8.15% divided by 365. Answer. How much you got? 22,333. 334. 22,334. Okay. This I need to add to what? 10 crore. Already it is there na. Like that you need to add every day. Second day 2 interest will add it. Third day 3 interest will add it. Like that on every day we will charge interest on that. Listening? Like this it look like. Because journey A is for how many days? 7 days. What swapping you will do? Fixed, floating. Therefore, all those will not happen in overnight indexes. Overnight index means every day I will close. Understood? That means every single day I will treat it as a separate day. That's why first day close. Second day you will open with this, including the interest. Did you understand what I said? Okay. Now tell me, these are floating rates or fixed rates? Do you understand how these answers came? 10 crore plus this came as this. This plus this just came as this. Overnight index swap, tell me the qualities of a overnight index swap. It will be on a daily basis or monthly basis? Daily basis. Compounding a fixed, simple. Compounding they will charge. Correct? Tell me now. You answer me one question. These are floating rates or fixed rates? Therefore, these interests are floating or fixed? Answer a changing interest, yeah. Therefore, floating or fixed? Floating rates. That means this is all the floating interest. Correct? This is all floating interest. He is asking us to calculate the fixed rate. What rate? Fixed rate. Calculate the fixed rate. Tell me. I am exchanging what with what? First tell me. I am exchanging what with what? I am exchanging fixed with the floating. Means I am receiving floating and I am giving the fixed. Listening, I gained or lost? Listen, I gained 317 rupees. I gained 317. Reverse question he asked. He didn't ask what is your Libar Mibar rates now. He is asking what is a fixed rate. Okay? Tell me. I got this much amount. Correct? I have to get this much amount. I won this much amount. Means fixed I am paying this. Understood or not? If I pay this much in fixed, if I receive this much in fixed, if I receive this much in floating, then the balance will be my profit.
Yes, sir. Yes, sir.
Understood? Tell me, in 7 days, what is my gain? 317 rupees is my gain. Correct? Tell me, if I receive in fixed, how much I would have received? Hello. See there, everyone. If I receive in fixed, how much I would have received? 153, 423. Since I am swapping to Libar and going for overnight index swap, how much I received? That gain will be 317. Actually, he didn't give this, he gave 317. Tell me again, please tell me. We are entering into normal swap or overnight swaps.
Overnight swaps.
Tell me, how much I have received through overnight swapping? 153, 740 I got. Okay, now how much I gained in the overall transaction, he said. Means in fixed I am receiving that much lesser. So this is the rate. On what principle you have to take this? Tell me. 153, 423 divided by 10 crore. Okay, na? Into 365 by 7. Why 365 by 7, yeah? This is for 7 days. We want per annum, means we should do 365 by 7. Tell me. 153, 423 divided by 10 crore into 365 divided by 7. How much? 0.0799, 0.08. How much percent? 8%. Answer 8 marks. That's all. So understood of overnight swapping, everyone? Understood? Overnight swaps you will take simple interest or compounding. What benefit you should get here for entering into 7 days transaction? 7 days, what you will get? That 317 also came because you went for compounding. Simple interest na beggar. Understood or not? So therefore, this is the situation of the banks here. Understood this question or not, everyone? Okay. Last one question I will take. Next question onwards you will take in the next class. Okay. Main questions, if I come in next session, I can put only on swap valuation. This is fantastically popular. Around 6-7 exam questions came on this. 2 questions I will show. Both the questions are of similar kind. Came in examination for 4-5 times. Swap, arbitrage. Tell me, there are 3 players in every market. Number 1, speculate. First question we have done speculation. Second question, floating fixed transformation, hedging. Third question is on arbitrage. Last, 4th one is also there. Asala, how you are getting Libar as a 4.2, 4.8? Question will arise or not? How you are getting that 4.2, 4. That valuation we will do. That's called as a Libar valuation. That's the last part of this chapter. Shall we? See the question. Sir, 2 minutes we will complete this. If you understand properly. See the question. 2 companies. See there. 2 companies, A and B, are considering entering into a swap arrangement with each other. Their corresponding borrowing rates are as follows. company AB floating fixed rates. Libor 12, Libor plus 0.3, 13.5. Rates given. Explain how two companies should enter into swap arrangement if the benefit of swap is split between two equally. What is the effective interest rate on their loans? Read the question first. There is a lot of logic in the question. I will explain that once you read. Wow. Student dedication, hats off. How many started? That many are there. I understood why they ask swap every time. Why they ask swap every time, I understood now. I will leave. Okay, shall we continue? Tell me. How many companies are there? Two companies. First question we are doing is on both the companies will do the swap by themselves. Second question with a swap dealer also we will see. One question I will do. One question you directly see there. Answer is also given there. Okay. First, what is the question we are starting with? Question number 7. See there. Two companies, A and B, are considering entering into a swap agreement with each other. Their corresponding borrowing rates are as follows. Corresponding borrowing rates are as follows. Floating rate to fixed rate. B also floating fixed. Explain how company should enter. Listen. So first, what should be swapped here? Both they have given. Students are doing mugging up literally. Question comes like this. Pro forma, you have to do like this. But what is the logic behind this question? Read. Take a minute, no problem. Observe the question. What with what we need to shift? Previous questions are clarity. Original transaction is in fixed. I want to shift to floating. Original is floating. Change it to fixed. Clarity. Here also what you are taking. Listen. Listen. There are two companies. Two companies are having two options each. Means one company can borrow in floating rate. Same company can borrow also on fixed rate. Second company can borrow on floating rate. Can borrow also on fixed rate. They are having option to borrow in how many ways? Two ways. Each company two ways are given. Correct? Observation number 1. Interest rates are lesser in which case? Company A na B? Fixed rate. A na B? A. Floating rate? A. Libor plus 0.3 means Libor 5% means 5.3 kada. So in both cases whose interest rates are lower? Why? That is a good credit rated company. Good? And a risky or less risky? Who is more risky? B. Already B is in more risk category. For more risk category, banks don't give floating rate of interest. They will charge what rate? Fixed rates of interest and floating. Sir, I will explain you the point clearly. See here. Who is in more risk? B. Answer. B. Who is in less risk? A. Since I am in less risky zone, A I am talking. Since I am in less risky zone, I can take risk. Who is in less risk? A. Therefore, A can take risk. Risk means uncertainty you can take. Uncertainty is there in fixed or floating? Floating. Answer. Therefore, A wanted to take floating, original position. Okay. Now tell me, who is in a less risk category? B. A. Therefore, I wanted to take a risk in interest rates at least. Okay. Therefore, I will take which loan originally? Floating. Means Libor plus 0.3. Libor. For whom? A. Next. Talk about the B now. B is in risky category or less risky category? Risky category. Answer. Risky. Already I am having a risk. Uncertainty will add to that risk. Understanding or not? Therefore, they don't want to go for floating rate. They wanted to go for the fixed rate. First understood the idea behind the question. All this explanation, one point also study material didn't give. These are CFA questions. From there they borrowed these questions, but they didn't give proper explanation in the ISM. Or else how student will understand what they wanted to tell? This is the real intention of that question. I repeat for one last time, listen. Whose interest rates are lower? A. Whose interest rates are higher? B. Means who is in less risk zone? That means who can take additional risk? A. Who cannot take risk at all? When I want to take risk, I will go and take the uncertainty. Uncertainty means floating or fixed? Floating. Therefore, tell me, I will write. A, B. What is the original position A wanted to take? What is the original position A wanted to take? Floating or fixed? Floating. What is the original position B wanted to take? Fixed. Why fixed? Yeah, B. B is in high risk or low risk? High risk. If I take LIBOR, again that is uncertain. That will add to risk? That will negate the risk? Add to. I don't want it to take. I go for fixed. I go for. Now tell me. I will go for fixed. Tell me. A go for? Participate. Yeah. A go for? B go for? Why you understood the concept clearly? Yeah? Original position is floating and fixed. Okay. Original position, tell me the rates. Floating. LIBOR. Here. 13.5. Now listen carefully. Both the firms met. They thought. A thought like this. I am paying how much LIBOR? I am paying how much LIBOR? B thought that I am paying 13.5%. Heavy interest I am paying. They wanted to swap. They wanted to what? Swap. What they will swap? Listen carefully, this is important. B wanted to pay fixed floating. If you don't listen, gone, I am telling you. B wanted to take fixed floating. It want to pay fixed floating. It don't want to take any risk. But its fixed cost is very high. How much? 13.5. Okay, next. B, A wanted to pay in what? Floating or fixed? Floating. Floating means which rate? LIBOR. They are feeling that LIBOR is also costly. Now they wanted to swap. They wanted to swap. How they will swap? Let us see. B will tell to A. B will tell to A. A, your fixed rate is only 12. You borrow at 12. You borrow at 12. Your payment I will do. Whose payment who will do? Yes, sir, why they will do? Why it came in our syllabus? Why they are doing like this to make our life miserable? They will do. That's how financial markets are running today. Again, who is more risky? B. Therefore, they don't want to take extra risk again. Therefore, they want which loan? Fixed loan. A is risk-free or riskless? Less risky or more risky? They can take risk. Therefore, they want which loan? Floating. Means what loan? LIBOR. A felt LIBOR as costly. B felt 13.5 is very costly. B said to A, we will do one thing. We will go for a swapping. I want fixed. My fixed you borrow. You want floating. Listening? Your loan I will borrow. Your payment I will make. My payment you make. How it will be? Okay, I will tell you. A to B. A to B. See the question and tell me the answer. Here only a question is there. Below question is there. See the question and answer. A payment to B. A's payment to B. Tell me. A is paying the obligation of whom? B. A is paying obligation of whom? B. B's obligation will be made by A. A's obligation will be made by B. First tell me, B is borrowing at how much rate?
13.5.
Answer. 13.5. Okay. A is borrowing at how much rate? LIBOR rate. These are originals. These are originals. Okay. I will write this way. Swap positions you tell. Which position? Swap positions. Okay. Tell me. One second. Swap position. B will borrow at, I will borrow at what rate? LIBOR. You will borrow at what rate? Fixed. Which rate? Fixed. Okay. Now answer my question. Originally if you borrow at fixed, this is 13.5. Originally if I borrow in my position, it is LIBOR. Now we are taking same positions, transforming the positions. Transforming the positions now. Listening? Okay. Now, A is there, B is there. Two persons, how they swap is a question now. Asal first you tell me, original positions, did you understand?
Yes, sir.
If you understand that, then only I can go into the concept and I can explain something. Original positions, everyone understood clearly, yeah? I want you to understand this. See the rates. 1 minute after I will tell. Once I start, I don't want to listen wrong answers. See the original positions properly. Okay, now? Shall we continue? Tell me, who is less risky? Who is more risky? B. So, B can borrow at what rate? Borrow at what rate? Fixed rate. A can borrow at floating rate. Floating rate means what rate? LIBOR. Fixed rate means what rate? Answer. That means fixed rate I don't want it to borrow. I want to borrow at A will tell that I want to borrow at a floating rate. Correct, no doubt. But my floating is how much? LIBOR. How much? LIBOR. B will tell that, B will tell that you borrow at 12%. Your 12 I will pay. Listening, your 12 I will pay because I want to pay what? Fixed. I will borrow in LIBOR. I will borrow in LIBOR. My payment you make. Whose payment who make? Tell me, whose payment who will make? B's payment A will make. Up to here, understood everyone? So tell me, swap position, A will borrow at what rate? 12%. A will borrow at what rate? A will borrow at what rate? A will borrow at what rate? 12%. But the 12 will be paid not by A, will be paid by whom? B. B will borrow at what rate? LIBOR plus 0.3. But that LIBOR is not liked by B. LIBOR is liked by whom? A. So who will pay? Now, swap positions on transformation. Tell me, you will pay this 12. I will pay this LIBOR plus 0.3. Now understood the point clearly? Yeah? I will write it separately. Tell me. Got the point up to here? Tell me. How many are there? A, B. Tell me now. Original position. I wanted to go for LIBOR. You wanted to go for fixed rate. Okay. Next. Original position ki what is the rate? LIBOR. Floating fixed. Okay. 13 point. These rates are seems to be costly or cheaper? Costly. They wanted to swap the positions now. Listening? Tell me now. What is the swap position? I wanted to go for how much to go for how much? 12. Whose fixed I will take? You want fixed, I will borrow because I have a cheaper fixed rate. Listening? You want LIBOR, fixed LIBOR. How much? LIBOR plus 0.3%. Sir, it is costly, sir. LIBOR 0.3 will be more costly. Listen, totally overall gain will come. How they come is a point here. Up to here, understood? But swap position on transformation. Really, 12 will be paid by B or 12 will be paid by A. Na? This is called as shifting of liability. LIBOR plus 0.3. Up to here, understood or not? Tell me. Answer my question. How much is the gain made by B? It has to pay 12, it has to pay 13.5, but it is paying only how much? It has to pay 13.5, but it is paying only how much? That means 1.5% gain or not? Somewhere, from somewhere sound is coming. One person is crying. One person will cry. Who is that? Arey, worst fellow, I am happy in life. Suddenly you came into my life. Okay, created sensation. You said that let us transform our lives. We transformed. Lately you are happy, I am unhappy. You have every responsibility to make me happy or not. First tell me, in this 1.5 gain whatever, who is making? Who is making? B. That 1.5 is not belonging to you. That 1.5 belongs to both of us. Listening? First, compensation of A to B. Sorry. B to A. B to A. Originally, think and answer. Originally, if A has to borrow, at what rate he would have borrowed? LIBOR. Because of he is borrowing it, means extra how much he is paying? 0.3. From this 1.5, I will first reduce that 0.3. That 1.3, 0.3 is a payment for me. It is a receipt for him. Receipt is a negative na for us. Okay, next. After that, tell me. After 1.5, how much is still pending? 1.2. 1.2 will be share. 0.6, 0.6. Listening, this is receipt of payment, receipt. Receipt of payment. For him, this is a payment because for him 1.2 la again 0.6 he is giving. Who? B. Tell me net Libar plus 0.3 minus 0.3 minus 0.6. So 0.3, 0.3 cancel. Libar minus, my Libar became Libar minus 0.6. For his transaction, let us see 12 plus 0.3 plus 0.6. Technically 12.9. From 13.5 fell to 12.9. That's how they will swap the liabilities. Understood the point or not? This is how original transactions in real life are happening. Understood or not, everyone? Got the point? This you can do in another way also. I have given one formula. Difference in fixed rate. Tell me, what is the formula? Difference in fixed rate minus difference in floating rate minus a dealer margin. In this question, dealer margin not there. Tell me, difference in the fixed rate. How many fixed rates are there? 2 fixed rates are there. Okay, now 13.5 minus 12 minus floating rate. Libar plus highest means lowest you need to reduce. Right, 12 minus 13.5 we will do. Libar plus 0.3 minus Libar minus 0. Nothing is there. Tell me. 13.5 minus 12 how much? 1.5 minus 0.3. 1.2. Shared between 2 people. 0.6, 0.6. What is my original? Libar. This is income minus 0.6. What is my original? 13.5 minus 12.9. This is how you can do. Okay? With this, 70% of this chapter is completed. Next 30% other problems are also there that we will see in the next session. Okay? So everyone had a clarity, yeah? Mainly session is for them. Hopefully this is useful for every one of you. Understood the concept as well. We'll meet in the next session and we'll complete remaining part as well. One small area is still pending. That also we'll cover.